Imagine waking up and finding out that the US Federal Reserve secretly vacuumed over 2 trillion out of the financial system without ever sending you an email, a text message, or a courtesy warning. Here's the craziest part. Most Americans have no idea it happened, but markets felt it. Stocks felt it. Housing felt it. And if you study risk assets like Bitcoin, you definitely felt it. Today, I'm going to show you exactly how the Fed drained this kind of funds, why they did it, and what it means for you in 2025 and beyond. Once again, welcome to Empower Capital. Sam, we break down money markets and macro in ways that everyone can understand it, not just Wall Street insiders. Remember that this is for educational purposes only. This is not financial advice. Make sure to do your own research with everything you hear on this channel or any platform. All right. So if you like clear explanations, real examples, and zero fear mongering, make sure that you hit the like and subscribe button so that way you can get more content like this. So let's get straight to business. So first of all, I want to talk to you about what QE and QT is. Okay, the simplest explanation you will ever hear. Let's go simple, right? So QE stands for quantitative easing. What does that mean? The Fed given the market Red Bull. That's QE. QE is when the Fed buys treasuries, right? So they buy mortgage bonds, right? And by doing that, they basically essentially injecting money into the financial system as they buy these treasuries. So think of QE like plugging a giant hose into the economy and pumping money in it, right? During the pandemic, the Fed opened the hose to max pressure. So think about that during 2020, 2021 pandemic, right? Because they had to step in. And what is QT? QT is quantitative tightening. The Fed putting the market on a diet. QT is the exact opposite, right? So the Fed stops reinvesting maturing bonds, right? Which allows assets to run off. What does that mean? Pulls cash out of the system, right? So what they do is they sell, right? And this way they begin to suck liquidity out of the market. So QT is like the Fed pulling money out of the swimming pool with a giant vacuum, right? So example that you'll never forget is imagine you host a party and you fill a giant punch bowl with 9 gallons of juice. So QE is basically you keep refilling that punch bowl. QT is you stop refilling it and the bowl drains fast. People get restless, energy drops. That's the US economy. Okay. So now let's go on to the next topic here is how much money does the Fed really drain? All right. So let's talk about those numbers because this part shocks people. So from 2022 to 2025, the Fed reduced its balance sheet by over $2.2 trillion when they began doing QT. If you go look at the chart, you see the market's going down since then. This was one of the fastest liquidity drains in modern history. QT pace breakdown will be from 2022 to 2023. It was about a 50 to 60 billion dollars per month average runoff. That's how much liquidity they were sucking of the market. Okay. But then obviously we hit the bottom and things started to go back up, right? So still strong, but slowing down. So what they do is they slow it down, the pace little by little, right? So, and then they went to 40 to 50 billion per month in 2024. By mid 2025, it slows cap, right? And now roughly about 20 billion per month was what they were doing. And then they released in the last meeting, the Federal Reserve meeting, that December 1st is when they were going to stop completely, right? So this QT cycle removed, right, more money than the entire GDP of Australia. That's how much money they were taking out. So more cash than the entire crypto market in 2022, right? More liquidity than all of JP Morgan's deposits. And it happened quietly, week after week, month after month, in a strategic, complex method called QT, quantitative tightening, right? It's important to understand these things. I'll explain to you why later. Why QT matters, right? A real life example would be now, let's bring this home with an example so it sticks, right? So example would be, let's say the stock market, when the Fed drains liquidity, right? Fewer dollars chase stocks, valuations compress, volatility rises, right? It's like reducing the oxygen in a room, the fire dims. The housing, right? Let's look at the housing market, right? During quantitative tightening, mortgage rates surged. People went from 3% mortgage to 7 plus overnight. Why? Because when the Fed stops buying mortgage bonds, investors demand higher yields. That makes mortgage more expensive. So what does that really mean for the housing market? That means if they're going to stop QT, mortgages are going to get much better. People are going to buy more homes, and we're going to hit a peak in the housing market before things go the other way. Correct, right? Because when the Fed stops buying mortgage bonds, investors demand higher yields. That makes the mortgages more expensive. Okay, so now let's look at an example of something like Bitcoin, right? So Bitcoin loves liquidity. Liquidity floats all boats, right? So when money's flowing, Bitcoin blooms. When liquidity dries up, Bitcoin consolidates or corrects. Okay, so like if you look at the pattern, you go look at the charts in 2023, QE, 2027, there was a QE. If you see, these were the tops of Bitcoin. This is when they hit the top, right? 2017, there was QE. 2021, there was a QE. This sparked major bull runs, guys. From 2022 to 2024, it's been QT still, right? But we've still moved up. More, lots of volatility, longer consolidation, up and down, up and down. Liquidity is the secret ingredient of every Bitcoin bull market. Okay. So now let's go further. Now, what happens at the end of QT? I just told you December 1st was the scheduled date that the Feds released in their minutes in the last meeting in October. So now what happens, right? Historically, when QT ends, liquidity stabilizes, right? They go from QT to no QT to QE, right? So risk assets recover, credit conditions loosen, investor confidence returns. Once again, it goes from QT at a high volume, they slow it down, and then they come to no QT, and then we get to QE, which is the crazy part of the bull market, right? Think of removing a weight that's been sitting on the market's chest for 3 years. So the market's trying to go up with all this weight on it. So Bitcoin specific insight, right? Bitcoin bottoms during tightening, right? Bitcoin explodes during easing. If QT ends and Fed returns to the neutral or mid easing, that fuel for the next bull market. So the bull market really hasn't really been in full gear yet. That's great news. So let's summarize everything I just said in plain terminology, right? So QE equals Fed added money to the system. QT equals Fed draining money from the system. That simple, right? And they use a mechanism, right? They buy and sell. When they buy, they inject money. When they sell, they take money back in, right? So since 2022, the Fed removed over $2.2 trillion. This affects stocks, housing, credit markets, coin, and so on. The end of QT is historically bullish for risk assets. Understanding liquidity cycles helps you invest with conviction, not emotion. So if you find this video helpful, and it helps you understand QE, QT, and how the Fed shapes the entire financial system, smash the like button so the algorithm shares it. Drop a comment. Do you think the end of QT would trigger the next Bitcoin mega cycle? And if you're new here, hit the subscribe button. We break down complex topics simply with zero hype and all facts. So see you in the next one. And once again, remember, make sure to do your own research. This is not legal, tax, or financial advice. Make sure that whatever you hear, you go ahead, use it as data point to do further research so that way you do not blame anybody for your lack of understanding when you make decisions. Okay? So see you next time. And remember, we love you. God loves you. Stay blessed. All right. Take care.